Today, I will try to answer the following question. Is the future of finance that is being built right in front of our eyes going to be decentralized and open-ended? Or is it going to be permissioned, censored, close-ended, programmable, and centralized? Over the last century, the operations of money and financing have largely been centralized functions, overseen by banks, regulatory authorities, and governments. Now, the ability to provide funding and facilitate transactions are functions that, in the broader economy, are provided under the oversight of centralized authorities and regulatory entities. However, with the emergence of cryptocurrency, practices and operations for finance are being reevaluated and disrupted with innovative and emerging approaches. You see, unlike fiat currency, cryptocurrency is typically not created by a central entity, central governments, and the ongoing operations of cryptocurrency systems are, as of now, not under government control. But you see, that's the problem, because our democratic elected governments and leaders who represent us, the people, hate the idea of a decentralized monetary system, because that would mean that we would have open markets, freedom to choose, privacy, and equality. Therefore, in the name of protecting us, the people, 2023, perhaps 2024, will be years where financial and intergovernmental regulators will issue new proposals, drafts, and recommendations in order to try to regulate the current cryptocurrency industry. The dilemma, however, is the following. You see, policymakers, the financial sector, and institutional as well as retail investors across the globe are left asking how a virtual asset existing only on a borderless blockchain ledger can be truly regulated. Likewise, if crypto is designed to be inherently decentralized, can it be regulated by central agencies? The answer is clear. Of course, it can't. And you will hopefully by now have understood that the creation of a decentralized financial system is nothing but a myth. You see, the future of finance that is being built right in front of our eyes and being built on Ethereum will be permissioned, censored, close-ended, programmable, and centralized. Before we move on, we need to make the following distinctions between DeFi and CeFi. You see, these are the two prevailing approaches to managing the trading and transactions of cryptocurrency. Centralized finance, CeFi, and decentralized finance, DeFi. Actually, CeFi has similarity to traditional forms of centralized finance where banks and exchanges manage currency and transaction flows. DeFi, however, enables peer-to-peer transactions without the need for a centralized exchange. And CeFi is already being implemented through the central bank digital currency. And a CBDC is coming to a country near you. You see, as of February 2023, this is according to the Atlantic Council, which is an independent organization based in Washington, D.C., that tracks CBDCs. Currently, 114 countries representing over 95% of global GDP are exploring a CBDC. You see, in May 2020, only 35 countries were considering a CBDC. Furthermore, 11 countries have already fully launched a digital currency, and China's pilot, which reaches 260 million people, is set to expand to the most of the country in 2023. And all G7 economies have now moved into the development stage of a CBDC. Even the New York Federal Reserve's wholesale CBDC experiment, Project CEDAR, has shifted the US from research into development. The important thing that you need to know is that CBDCs are different than Bitcoin and other cryptocurrencies because they are created and governed by a central authority, and in this case, a nation state. So you can make the case that many cryptocurrencies are also centralized, but there are many that fall on the spectrum of decentralization. And that is what makes them unique from our current fraudulent legacy financial system. You see, all CBDCs are centralized by nature. The word central is even in the name, right? So this means there's a small number of decision makers controlling how the currency flows through the economy. And this is similar to how the current financial system functions, with groups like the Bank for International Settlements, Federal Reserve, the European Central Bank, Bank of England, Bank of Japan, who are given the authority to set monetary policies. And of course, with the help of implementation and execution by the IMF and the World Bank. It is also important to understand that not all CBDCs are created equal, and nation states, they will deploy them in a variety of ways, leading to a significant implications for their citizens. And the consequences of specific CBDC designs will play out in everyday society and culture differently. But now let's explore some of the nuances of CBDCs so that you are prepared for the coming revolution in government money. A CBDC is a central bank digital currency. They are digital versions of a nation-state currency issued by the central bank of a given nation. They may or may not be backed by another asset, or they may exist purely as fiat currency, which means their value is based on the promise of the government. And you see, most nation states use fiat currency today, and you could think of a CBDC as a digital version of fiat, however, that has a special, unique addition in capabilities and functions because it's purely digital. So for example, in the US, a CBDC would essentially be a digital dollar and is often referred to as such. Studies of how to apply CBDCs and begin issuing them are underway from several major nations across the globe. Some countries have already successfully launched their CBDCs, including Nigeria, often viewed as the next evolution to replace cash as the dominant medium of exchange. However, hurdles remain before we will see widespread adoption. Now, needless to say, governments, they like CBDCs because they are issued by the state and it allows for tight regulation within a closed ecosystem. You see, CBDCs are under the direct control of the government, unlike cryptocurrencies, which are issued by the private sector or public blockchains. Now, one concern of many governments is that cryptocurrencies offer populations a choice to opt out of the traditional financial system into decentralized finance, which exists beyond the typical oversight of government regulation. CBDCs are a way for governments to offer a digital payment competitor to cryptocurrency and decentralized financial systems being built outside of most current government regulation infrastructure. So it is appropriate to point out that money has not been under the control of a centralized authority for very long if we go back in history. You see, just a couple of 100 years ago, gold coins were accepted around the world without any central oversight. It is actually only in the last 100 years that governments saw the immense power they could harness by establishing central banks to exert central authority of their economies. So governments, they see CBDCs as a path to regain their monopoly on money because one of the best ways to control a population is through the economy. A vice grip on monetary policy is an important lever of control that governments are not keen on relinquishing. But questions remain about how quickly citizens of a certain country will adopt this new form of money like the central bank digital currency. You see, many factors could influence this arc of adoption. Adoption will likely vary greatly depending on the nation's existing political climate and system. Cultural differences may also make one nation more open to such evolutions in currency versus others that may be warier of these new technologies. Now let's remember that crypto is opt-in because you and I, we have the freedom to choose if we want to participate in the cryptocurrency and the Web3 economy. Nobody is forcing us to download a crypto wallet and start trading NFTs or cryptocurrency tokens for that matter. It is entirely our own individual choice. And therefore, it is critical to note that CBDCs may be an opt-in, or they may become forced upon us, mandatory, depending on the laws and rules of a specific country. So you might be asking yourself right now, is cryptocurrency going to be deleted, extincted? Well, the short answer is, as a concept, blockchain cryptocurrencies, they will survive, but the sector will likely face increased regulation and an extended period of uncertainty. And many protocol and current cryptocurrencies, they will perish. So what can we expect from cryptocurrency regulation in 2023? Well, a clear trend toward greater regulation, obviously. And I believe it will be a while before we can say the trend of more regulatory enforcement is going to ease, flatten out, or recede. In fact, it's going to continue to increase. Where will regulation step in? Well, I believe the new regulations, they will focus on a number of different aspects of the cryptocurrency industry, including cryptocurrency exchanges. Reason being, they provide fiat on and off ramp infrastructure. So this is a gateway to control the inflow of money into the crypto world and then the outflow of the money, meaning converting crypto to fiat and then to cash out. And this is really what the governments care about. So I expect much of this regulation to target Know Your Customer, also known as KYC, anti-money laundering, AML, and taxation, obviously. So the governments, they're going to start to regulate the exchanges, especially centralized exchanges, and most likely then decentralized exchanges too. That means that there will be a strict AML and KYC process in place. You see, protecting customer assets is also going to be a priority. They will have to make sure that central exchanges are solid, that there's enough capital to make sure it's operating properly, and that there is segregation of customer funds. So a customer who's using a centralized exchange, that their funds are there and cannot be tapped into to do something different, as we have experienced with FTX. Furthermore, counterparty risk is also probably going to be another focus. You see, when one firm defaults, it impacts the other firm, right? Like a domino effect. And when the other firms default, it impacts the entire industry. So currently, we are clearly seeing a lack of counterparty risk management, and that, I would say, is a good thing because that would segregate this type of domino effect. Last but not least, stablecoins. You see, other regulations, they will focus on stablecoins, digital assets whose value is pegged to other commodities of currencies like the US dollar. Now, stablecoin is one of the fundamental concepts in the crypto space and relatively straightforward because you need a collateral of a dollar against a dollar of USDT or USDC or whatever the stablecoin might be. Now, I am, however, sure that there will be new rules, updates, or potential legislation to deal with that and will address specifically who and who cannot be a sponsor or an issuer of a stablecoin. You see, in the end of the day, the government wants to be the ultimate issuer of the stablecoin or the digital dollar or euro. So before we end, Mimi and I, we want to give you our 2 cents on the dollar. And it goes the following. Enforcing new regulation plays a central role in rolling out a CBDC. Obviously, I think you and I, we all expect the current trend of increasing enforcement actions to continue with potentially more severe penalties. So in the near term, we're not really going to see a change, but rather an acceleration of the existing trend. Now, certain areas such as AML, KYC, or sanction violations, they are good examples. So increased enforcement will also mean a growing amount of case law, like studies, that can actually serve as a de facto regulatory framework, especially regarding what is and isn't a security. And we all know that is one of the most important questions currently in the world of digital assets. But leaders within the digital asset space, such as Polkadot, already participate heavily in what we could call self-regulatory organization type activity. And there are some good news coming out. Polkadot, in fact, consider themselves or have mentioned that the SEC do not consider Polkadot as a security, but de facto as a software. You see, Polkadot early on realized that the credibility of the whole industry is at stake. So, continued advocacy for smart regulation is critical for the long-term success of the overall industry and in order to achieve widespread adoption. So I guess what an investor would like is to see that standards are going to be created and a level of transparency that would allow for the legitimate community within the space to operate and continue to grow. Not everyone will be happy about a more robust regulatory environment. So short term, a lot of entrepreneurs, they don't want to deal with regulations because it's costly, both in terms of time and capital and energy. And they will naturally fly away, hide, or go to jurisdictions where there's less regulation or there is less strict regulations in place. But many, they will embrace it. And some results of regulations will be welcomed by everyone. Now, a certain amount of regulation will definitely boost investors' confidence, especially after the chaos that we have seen with Terra and FTX and 3 Arrows. But lastly, don't forget, the question of this video was actually CeFi versus DeFi, right? And I believe that we are going to see not DeFi versus CeFi, but CeFi together with DeFi. I think it's inevitably going to be a central bank digital currency issued by the government, and then we will see decentralized, autonomous organizations offering decentralized finance. That is permissionless and trustless. Let me know what you think, and in case this video gave you any kind of, valuable information, then hit like, smash, and subscribe, and all them goodies, and come and join the live streams, because the future of finance is being built right in front of our eyes, and is being built on the blockchain. Ethereum and Polkadot, interoperability. Come join so that you can become among the 1%. My name is Nico Harachi, and I've already proven that I am number 1.